Good morning, students. Before we start the income tax, we have to understand certain terms. First is the financial year. Financial year means a year for which we are calculating the income tax. Like we are calculating now the income tax for 2019 and 2020. Every year when we receive the income in whatever shape it is, then when that financial year finishes, our financial year starts from 1st of April to 31st of March. Like in this case, 1st April 2019 to 31st March 2020 is the financial year for the calculating the income tax. So whatever income we receive during this period, that we have to take into account and will calculate the tax. Then it is the assessment year. Assessment year is 2020-2021. Assessment year is a year in which we are calculating the tax. We always, assessment year is the current year and the financial year is the previous year. So we have a time limit to calculate the income tax. Normally we calculate the income tax in till the month of June. Sometimes that limit is extended by July to file the income tax return. And this year to file the income tax return, the date is the 31st December 2020 due to this corona, and the assessment and this date to file the income tax return has been extended. Then we have gross income. Gross income is income that we get the income from different sources. We have a salary, we have a rent, we have a profit, we have some capital gain, we have some lottery, and etc. So many things are there. Then exemptions and deductions. What do you mean by exemptions? Exemptions are certain amount which are exempted from the tax, like donation, that is exempted. Deduction means we add in our salary and later on we deduct, right? Then HRA. HRA is house rent allowance. House rent allowance is the salary individual who lives in a rented house can get the benefit of HRA. That depends upon his income, how much is exempted and how much he is getting. Then we have standard deduction. Standard deduction is that is allowed up to 50,000 is allowed to the salaried or individual persons. It is allowed to individuals and salaried persons. Then we have deductions under section 80C. What are the deduction in 80C? The maximum deduction under 80C is 1.5 lakh. And what are there? In part are included LIC premium, rather any policy premium, or we deposit in ELSS, that is called equity link saving scheme. That is also a tax saver scheme. Then we contribute money to EPF. EPF is Employees Provident Fund. Then we have GPF, that is General Provident Fund. Then we have principal payment on home loan. Principal payment on home loan. Then we have tuition fee of 2 children, that is maximum up to 2 children are allowed. Then PPF, Public Provident Fund. Then National Saving Certificate, NSC certificate, and then it is new is NPS, National Pension Scheme. Whatever is the total of this, maximum 1,50,000 is allowed as a deduction of under section 80C. Then deductions under section 80D. 80D is a person can save the medical insurance premium. Medical insurance premium, that is up to 25,000 maximum. Meaning by if I pay 16,000, I can avail the deduction of 16,000. But if I paid 30,000, then I can avail up to 25. If I paid 50,000, then also I can avail this. Interest on home loan under section 80E. If a person taken the home loan owner can took the loan and claim the deduction up to on home loan, whatever interest is paid, maximum up to 2 lakh of deduction I can avail. Then deduction home loan. Then deduction under section 80E. 80E is if a person is having taken the loan from the spouse for his spouse or children, education loan for children or spouse, then he can avail this deduction up to 8 financial years. There is no limit, he can deduct it, whether this they are studying abroad or here. Then deduction and under section 80G. Deduction under 80G is some sort of donations are made. Under this section, one may avail 50% or 100% of deduction. That depends upon the type of organization I am paying. Prime Minister National Relief Fund, I can claim 100%. Family Welfare Relief Fund, again 100%. National Security Fund, 100%. Prime Minister National Relief Fund, then Family Welfare Relief Fund, National Security, right? Prime Minister Earthquake Relief Fund, 100%. Then Swachh Bharat, Kosh, 100%. Clear Ganga Fund, 100%. Chief Minister Relief Fund, 100%. These are 100%. Apart from this, now Jawaharlal Nehru Memorial Fund, 50%. Prime Minister Relief Drought Fund 50%, Indira Gandhi Memorial Trust 50%. Apart from this, any kind of deduction I made, I can avail 100% if that organization is registered organization. Then deduction under section 80 TTA. 80 TTA is interest on saving account. Suppose I have a 4-5 saving accounts and in a financial year I get 9,000 as an interest, then maximum I can get the deduction of 10,000. If it is 9,000, I will get full. If the interest is 12,000, then I will get only the benefit of 10,000. Then we have taxable income. Taxable income is what? Taxable income is income used to calculate the tax up in a given taxable income is that is equal to gross income minus all exemptions and deductions. Then we have income tax slab. Income tax slab is what? Income tax slab, a different slab is given. We have two slabs now, 2020 and 21. We have two slabs. One is the old, and 2021 we have new slab also. That we will see your book, and in a book it's given. I'll share this how to read it, right? Then we have taxable tax rebate under section 87. Tax rebate under section 87A. Maximum rebate in this is 12,500. This section give the who has opted the tax rebate is given under section 80 is allowed to the individual maximum of 12,500, and for taxable income maximum up to 5 lakh. If the income is up to 5 lakh, then 12,500 is there. Then we have health and education cess. A cess is in the form of tax collected by the government for health and education. 4% health and 4% cess is levied on all the individual who are liable to pay this. That is before the deduction of 12,500. So now we have to see the format. First we have gross income. We will calculate the gross income from all the sources. Then we have to subtract first HRA according to my limit or eligibility. Then I have to deduct deductions under section 80C, 80D, 80E and 80G. That is donation, that is PF etc. and 80D. 80D is the insurance and 80E is the education loan. Then after calculating that, we will after this we will get the taxable income. Then we will see the table and calculate the tax from table as per slabs. And the sixth is then subtract 80, then we will subtract 87A if eligible, that is up to 12,500, and we will add 4% cess, health and education. This is how we will calculate. Now we have to understand a question here. The first question is, question number 1 is, in a financial year 2019 and 20, the Varun's gross salary was 7,28,000. He deposited 8,000 per month in National Pension Scheme, 21,800 as premium. Of insurance. Insurance can be of any company, it's not necessary it should be LIC. And he deposit 5,000 in his PPF account and 40,000 as tuition fee of 2 children. Calculate the tax he has paid. Now first of all we will write gross income. We will write here gross income was 7,28,000. Then we have standard deduction, that is for all individuals or salaried person, 50,000. So balance is 6,28,000. Now we have deductions under section 80C. 80C we have 8,000 per month. NPS is 8,000 into 12, 96,000. Insurance, he is paying 21,825. PPF, he is paying 5,000, and tuition fee for 2 children he has paid 40,000. So total comes to 1,62,825. But maximum deduction allowed is 1,50,000. So we have paid, then it is 5,28,000. Right, that is his taxable income. Now we will go to the table. When we'll see the table, in table it is given that income will be, taxable income will be, income tax will be, income tax up to 5,000, 12,500, plus what is left is 20% of whatever is above. Above is how much? 28,000, because we subtract 5 from his So taxable income will be 12,500 plus we have calculate 5,600. So taxable income will be, is tax comes to be 18,100. Now we have a cess, that is 4% on 18,100, 724. So the total tax he has to pay 18,824. That will be the answer. Let's do one more sum. Another sum is this financial year, the gross salary was 8,50,000 exclusive of HRA. He deposit 9,200 per month as General Provident Fund, 43,000 as insurance premium, he donated 25,000 as Prime Minister National Relief Fund. He took loan of 24 lakhs from State Bank of India and paid 76,000 as interest and 20,000 as principal amount. Calculate tax. Now first is the gross income. Gross income was 8,50,000. Then we have standard deduction, that is for all 50,000. Balance is 8 lakh. Now deduction under section 80C. 80C is okay. Before that we have to subtract 80G donations to Prime Minister Relief Fund, that is 100%, 25,000, that is 775000. Then deduction under section 24, that is the interest on loan, maximum is 2 lakh. We have paid 76,000. We'll subtract this, so it is 699,900. So deduction under section 80C. 80C is GPF 9,200 into 12, 1,10,400. Insurance is 43,000. Then house loan principal, that is 20,000. It comes to 1,73,400. Maximum allowed is 1,50,000. So 1,50,000. So taxable income comes to 549,000. So slab till 5 lakh, it is 12,500. 12,500 plus 20% of 49,000, because if you see the slab, it is 12,500. 5 to 10 lakh is 20% exceeding this 49,000. That will comes to 9,800. Total tax come to 22,300. And we have a cess at the rate of 4% for education and health, that is 20 into 4%, that comes to 892, so it is 23,192. So thanks for today. Still you have a doubt, you can call me at my number, this or this, because there is nothing difficult in this. Thank you very much. Thank you very much.